Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. We've seen the dollar start the week off on a solid note. It's regained out above 98. Now, we have 98 as a previous resistance. You got the 50-day moving average, a couple other technical indicators aligning there, but now we're handedly out above there, and it's coming in as support. We believe the bulls are slowly taking the driver's seat of what has been a bullish trend all year long as the dollar index can hold out above 98. As for the euro on the inverse side, we see resistance. It's called right around 110.90, and a couple of indicators as well as the 50-day moving average coming in there. But now we're also moving into and through a bit of support, 110.37, 110.50. Below there, you're creating a path of least resistance, not too much further, but at least 110. And heading into tomorrow, we got heck of an economic calendar. You got some early CPI number out of Germany. You have, most importantly, though, U.S. CPI, 7:30 a.m. Central Time. And then Fed Chair Powell begins his two-day congressional testimony. So a lot to take in. And ultimately, if the dollar index is holding out above that 98 level after Fed Chair Powell's testimony, it likely means that he was either less dovish or potentially hawkish, and it's going to create a path of least resistance. It's going to potentially power the dollar stronger into the rest of the week. But again, he has a two-day testimony, but we've already been starting to see somewhat hawkish comments from different Fed members. Philadelphia Fed President Harker earlier today, had spoken, and he says he sees no reason to further cut rates. He wants to see how the economy evolves, taking in the three cuts that we've already seen. He's not a voter in December, but he's a voter in 2020. We also get another 2020 voter later today in Minneapolis. Fed President Kashkari at 5 p.m. Central Time, I believe it is. See what he has to say. He's been more dovish, but a lot of these Fed members are looking to ultimately see how these rate cuts evolve. It's easy for the 2020 voters who are not voting in 2019 because they don't have to make a decision in December. But right now we are seeing those odds price out. There is not a cut expected in December. And again, Fed Chair Powell tomorrow is going to put his tone, put his stamp on things. Another mover this week has been the British pound. British pound strengthened yesterday on Brexit news. 128 has been a bit of a floor. The data out of Britain yesterday morning was not good. We saw manufacturing contract bigger than expected. We saw GDP coming below expectations. We got CPI out of Britain tomorrow, so keep an eye on all of that. Surprising note too, though, we've seen better than expected data out of Europe and the Eurozone, and we really haven't been able to see the euro hold ground. It just shows you how strong the dollar really is internally right now. But this morning, good thing to note, ZEW sentiment coming out of Germany was not as bad expected. Still, it was negative, but this was actually somewhat of a bright spot. Trade balance data, factory orders last week. A lot of good notes here. Look at these numbers as they start coming in. Are we turning a corner? We might be, but if we do, the dollar, the U.S. is turning the corner more sharply. So keep an eye on all that. And now, if we are turning a corner, it really doesn't make a very good sign for the yen. And now the yen, we've talked about it, closing below 92 a couple weeks back, leaves a path, leaves resistance down to 91. We got down to about 91.5. Now you have a trend line coming from that spike high earlier this year. 92.5 really is where that trend line comes in. Close about above there. Start to neutralize this from a previous low of 91.5. So we have that range, 91.5, 92.5, hugging near 92. But again, we believe path least resistance lower. GDP data out of Japan on Wednesday, late Wednesday, so keep an eye on all of that. But again, equity markets pulling back a little bit from the highs. We're still at record levels essentially, but we did set a new record high in the S&P today. Pull back just a bit, and the yen is helping turn it green on the day. Now, moving forward, you got the Aussie dollar, 68.25. Going back to last week, we talked about 68.25. Big level support there. If you believe the China-China trade deal is going to continue to develop and positive things are going to happen, 68.25 is your buy area. Now, we don't really necessarily believe that, but overall, we're seeing some construction. Now, tonight, you got consumer sentiment out of Australia. You have a rate decision out of New Zealand, so keep an eye on some volatility coming from that region. One that has fallen out of favor is the Canadian dollar. The Canadian dollar is slipping at 76. Going back a couple weeks, there were some knee jerks below 76, never closed below there. But then we finally started closing below, and it just kind of falling. So right now, the Canadian dollar is out of favor. We liked the idea of a higher Canadian dollar, potentially divergence in policy. It really just hasn't played out. But we do have trades here at the trade desk. We're doing. We have a very interesting euro spread we put on and playing downside of the euro, actually getting paid to play the downside and directionally make money. So we got some things we're doing here at the trade desk we really, really like here in the currencies. Give us a call. Don't ever hesitate to reach out to our trade desk, 312-278-0500. You can email us, info@bluelinefutures.com. You can check our website for updates, but those trade alerts and those trade ideas, you're not going to see them on the website. You have to call us and talk to us. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you very much.